YouTube, welcome back to my channel. My name is Chris Basio. So the last video I released was unboxing a credit card. And that's great and all. But what I decided to do while I'm in the warehouse packaging product to ship today, these amazing products, I want to talk to you guys about credit. Because although credit cards are cool and you can get perks and free travel, you can leverage it, build relationships with banks, if you don't understand how to build credit, you may be like me and not have credit for far too long. So what I understand about credit, and again, I'm not a guru, I'm just speaking from personal experience, is that the majority of credit is about your payment history. Your credit score cares about what credits you have and what is your payment history on those credits. The most common way to build credit is to have credit cards, have a balance, pay it off every month, show a history of making those payments. That's a huge percentage of your credit score ratings. Another big defining factor of it is how long you've had these credits for. So I mentioned in the last video that I had this credit card, doesn't give me points, doesn't have a big credit limit. It was my first credit card, but I've had it for over 12 years. So having that account open so long, it shows that I can maintain and keep an account in good standing for a long period. There are people who have above a 700 credit score but won't get approved for the same credit cards I would, having the same credit score because they don't have a long enough history of credit. But another big thing is, what is your credit utilization? And ultimately what that means is, you guys saw I got a new credit card yesterday with a credit limit of $15,400 on that credit card. Now, you want to stay below 30%, but from my experience, my score actually dropped just a tad bit by being at 30%. Now you don't want to go above 30% of that credit limit. So 15 grand, what is 30% of 15 grand? 5 grand? About $5,000? So you don't want to go above 5,000, but depending on your overall credit report, that could still hurt you. So I would say stay below 20% to be safe. And then you want to pay it off every single month. Because creditors will see your utilization, and if it's above 30%, they might think this guy needs the money, therefore he's a little bit dangerous to lend to. I know it's weird, but banks don't want to lend to people that need the money to survive. They want to lend to people who need money to grow. If you need money to grow, you can usually pay off your debts pretty quickly. It's weird, but that's how it works. If the tables were turned, it makes sense. I don't want to lend money to somebody I know needs the money to survive. Because if things don't work out, I might not ever get my money back. I know a lot of this stuff when I got started building my credit. I was afraid of banks, almost like a phobia. I remember when I was working at Arby's, before Rich Dad Poor Dad, before I started my journey, before I started my barbering career. I remember going to a credit union and they checked my credit score and they wouldn't let me open a bank account. That's how bad it was. And when I got denied that way, I felt dumb. I felt like I wasn't good enough for banks and for business. And I began to be intimidated by banks. But education, but knowledge will make you more confident when you walk into a bank, knowing that all of your ducks are in a row. All right, but my wife is ready to go, so I'm gonna finish this video at my house.
All right, so we are here in my office. Now that we're here, we can continue this conversation. And so I want to bring this over to what would I do? I'm Chris Basio, I'm 18 years old. I have the knowledge that I have today. What would I do to start building my credit? And what I would say is, number one, I'm opening a bank account. I'm opening a bank account with a bank that fits my needs. Now, when I opened my bank account, I went with Bank of America because they're everywhere. And I was going off to college. I wanted a bank that my parents could reach, that I could travel with and have access to. Some of you guys really want to get with a credit union, but sometimes they're not available like that. Online banking, kind of the same thing. So I wanted to have, for convenience sake, a bank that was reliable that I could get to. And usually banks like that are more expensive, but that's the cost of convenience, I guess. After that, I would try to get a credit card through that bank. Now, Bank of America gave me my first credit card. It was an entry-level card, has no annual fees, but it also has no rewards. And it was only a $500 credit limit. Some of you guys who don't have a relationship with a bank, don't have any credit, you may have to start off with a secured credit card, which I would say go with the Discover It secured card. And what a secured card is pretty much you give them $500, that's your credit limit. You're gonna treat it like a credit card. You're gonna pay it on time. You're never gonna carry a balance. And Discover is gonna look at you and say, after maybe let's say 6 months, you have been doing good. We're gonna offer you an unsecured card now. And that might be the route that you have to go. I didn't have to go that route. Once you've gotten this entry-level card and you've had it for about 6 months, I would start looking into getting into the next step up. That might be a credit card that has no annual fees, but has some rewards through your bank or through the bank that currently gave you a secured card. Or I would try to get in with the Chase program. Try to get in with one of their lower tier cards like the Freedom cards, but you may have to do a secured card, then the next step up card, and then get into Chase. But once you're in Chase and you have that Freedom card, the next step up, I would try to get the Freedom Unlimited, and then I'd try to get either the Sapphire Preferred or Reserve. Once you get into the Sapphire world, your credit's pretty damn good. If you get approved for a Sapphire, chances are, if you're not applying for credit cards every day or something, you should be able to get approved for pretty much any credit card. Loans help your credit score out as well. So depending, I guess, on where you are in your life, you may want to get a mortgage. You may want to buy a house. Car loans help your credit too. I prefer not to have a car payment, but we all got to start somewhere. You may have to get into that Toyota Corolla, but I would wait till I have at least the Chase Freedom card, because at that point your credit score is pretty good and you shouldn't have to get a car loan that it has crazy amounts of interest. But having a credit report that has different types of loans, either credit cards, a mortgage, car loan, that type of thing, it also helps your credit score. Some people are going crazy and they want to get an 850 credit score. You don't really need it. After a 750, you pretty much get the best rates out there. Some people really keep scoring. They want to get that 850. It's more like a personal thing, but you don't need it. Once you're in the 750 area, you pretty much get the best rates out there. I think it's pretty easy to get to that credit score. I got my credit score to a 789 after 2 repos in 3 years. So I think it's easy to do if you're disciplined, but it's also easy to screw up, because one late payment, one I forgot that bill sent to collections event, and your credit score gets shot. It's really amazing how that works. But guys, please don't be the guy that says cash is king, who needs credit, I make a bunch of money. Because just like I said, it's easy to build your credit, but it's also easy to lose your credit. It is worth keeping it good. It is worth being a triple threat, man. You want that credit to be good, you want that cash to be good, and you want to be informed. Now, I don't really use any services for building credit. I've heard good things, I've heard bad things, but I just know you don't need it. And this is coming from somebody who's had 2 repos. Now, one of the tools that I use is Credit Karma. And Credit Karma, usually the credit score they have on there is wrong. To give you an example, at one point Credit Karma was telling me my credit score was a 705. And then when I ran my credit, it was actually a 789. That's a big difference. But I do like Credit Karma because it gives you strategies, it helps you keep track of your credit utilization, and it just shows you what creditors are looking at with your credit report. But you can also use the app to dispute anything as far as collections or accounts that you may not have opened. I've actually disputed a few things in the past that were indeed wiped off my credit, and all I did was pretty much say, this account I've never heard of, don't know why it's there, and it actually happened to me. There was a Bright House account that was created. I had no idea who created it. Somebody must have got hold of my credit or my social security and opened an account, disputed it, and they took it off, and it helped my credit score. I'm subscribed to Experian, the Experian app or website. It gives you a subscription. I think the one I'm using is $25 a month. It gives you your credit score every single month, not just from the 3 main creditors, but a whole bunch of other credit scores that banks will potentially look at. For example, if you were to go to try to get an auto loan, there's a separate credit score for that. If you were to go try to get a mortgage, there's a separate credit score for that. And so it'll actually show you what those credit scores look like. But it also monitors your credit. It offers fraud protection. There's a lot of perks to it. I would go to the website, check it out. You could also use FICO, but that one's $40. And to be honest, Experian, to me, is doing its job. Especially since a lot of times when you get a credit card, your credit card issuer, whatever bank that may be, offers your credit score as well on pretty much a monthly basis. It'll also help monitor your credit. And a lot of times you can find this through your bank's app or credit card's app. Through Experian, you can also get your credit report. And in your credit report, you can see if you have any collections or what's really hurting your credit score. If you have collections and you don't know who they are, I would dispute them. If you do know about them, I would give the collectors a call and I would try to work something out. If it's a lot of money, a lot of times you can negotiate how much you give them. You can even get on a payment plan that puts your account in good standing and actually looks good on your credit report and your credit score. There's times that I've paid off balances for a fraction of what I owed the collector. And it's okay because a lot of these collections companies, they're buying that debt off of the bank or whoever you owe money to for a fraction of the price. So even when you negotiate how much you owe them, how much you can pay them back to put your account in good standing, they're still making a profit off of you. So if your credit's bad, you gotta play janitor for a little bit and clean things up. But I think just switching your mindset, man, and making your credit a priority, checking it every day, just like you check the score of last night's game. Some of you guys check Facebook, check Instagram, check YouTube, check ESPN app every single day, but you don't check your bank's app and you don't check your credit card's app every single day. You look at LeBron's stats every day, but you'll go months without looking at your own stats. We gotta start thinking like some ballers. I wanna know what my turnover ratio is. I need to know where on the floor I need to practice shooting my jumper. If I'm weak with my left hand, I need to start going to the gym working on that left hand. And so when you look at these apps and you see where you're weak at when it comes to your finances and your credit, it's time to go to the gym and practice. It's time to work on those weaknesses. I keep telling you guys, we got one life. And I don't know about you guys, but for me, I'm trying to be a Hall of Famer. So if you've been watching my videos from the beginning, you should have your money management set up as far as how your banking and your money flows through it. You should know your why. You should be working on short-term and long-term goals, working on your credit if it's not there, and working on making more money. And we're in 2020. There's so many tools you can use to manage all this and to see it happening. I suggested the Mint app. That's to look at your budget and keep your eyes on it. And as a matter of fact, I would even consider using your credit cards for most of your purchases, but you have to pay them off every single month. Paying off your balance every month on time. There shouldn't even be any other option. Paying your credit card balance every single month should be just as important as putting gas in your car when you see the gas light come on. As a matter of fact, turn on auto pay where it pays the balance every single month. Turn on auto pay so it at least pays the minimum payment, because having a late payment is super bad for your credit. But you want to pay it off on time. If you do that, you pay it off on time every single month, and you use your credit card for most of your expenses, you'll be racking up a bunch of points, you'll be building your credit score, and you'll be participating in an organized money flow that your accountants, your CPA, or your financial advisors can look at and see something they're proud of. And one more thing, since your credit utilization ratio is so important, if you have a $500 credit limit and that's all you have and you've had it for a while, call your bank and ask them to raise that credit limit. So every dollar you spend takes up less of that, because with a $500 credit limit, if you spend $200, you have 40% utilization. But if your credit limit is $5,000, you spend $200, you're not hurting your credit. The sweet spot for an 850 credit score, believe it or not, is 21 open accounts. These are 21 accounts that are showing a history of good standing and on-time payments. So the amount of accounts open actually does matter. So when you can't get a credit card or show some proof of good credit history, as long as it's within your budget, take advantage of it. Now that's all I got for you guys. Hopefully this video has helped. See you guys on the next video.